Let's focus on technical support and resistance lines for all our major, minor, and cross figures, and also on crude oil at the end. So let's start from the top. The world's most popular currency pair, euro-dollar. So currently, this pair is trading at 112.40. Big leap there following yesterday's poor ISM non-manufacturing PMI. Support is just around this line at 112.40. So the pair did settle above support, but let's see if it holds on to these gains. Today, there shouldn't be anything to push it off. If it does fall off, further support awaits at the post-Brexit high level of 111.90, and this is followed by 111.15. Okay, to the upside, we have the veteran line of 113.35, which was the bottom end of a high range when the pair traded, and the pre-Brexit high just on the night of 114.20 is resistance above. Okay, pound dollar cable, quite a ride, 134.07 as we speak. Support there at 133.60. You can see that the pair struggled to break above this line on this channel. It had this narrow channel here. We eventually broke above this, very nice series of higher highs. Anyway, further support to the downside, 132.50, and further below, I can see support only at 130.60. If we look to the upside, we'll need to zoom out to the daily chart on cable and pound dollar, and here we can see the post-Brexit high. Look at this big Brexit crash. The post-Brexit high of 134.80. We're not that far away from that point, okay? So this is a very important line to watch, because above this line, it's only somewhere like 138. I mean, the pre-Brexit low of the year. Okay, so cable is certainly at the very high end of the wide range we've seen recently. Dollar yen had quite a fall tonight, in the Asian session, morning in Asia, night here in Europe. So we had a reaction to the poor US figures, but the first reaction was quite limited. Actually, non-farm payrolls, it didn't hurt the dollar yen so much, but yesterday we already had a big fall and then an extension just sort of in the Tokyo session without any indicators. I still look at this line 101.50 as some kind of battle line, some kind of pivot line. To the upside, we should update. This line I had here isn't that relevant anymore. Sorry. Anyway, 103, I would say the round number here provides now, it switches from support to resistance. If we zoom out just a bit, I would say 104. I thought it would be around a nice number, but actually I had a few moves above 104, so I would say 104.50 isn't a strong line. I would look more at 105 and 106.90 as high levels up there, but so far this high, you can see this is a head and shoulders pattern on dollar yen, 104.30 and 103. So 104.30 as the top of the head and 103 as the shoulder line. Okay, so further below we have 100.70 worked, and it's both support and resistance. Of course, the key line to the downside is 100, and it's followed by 99.60. Dollar CAD had quite a ride, well, to the downside. A very nice finding here, support at 128.30. I always say that the Canadian dollar CAD is sort of overlooked, undervalued, but it has nice technical behavior. Look how it got stuck at 129.10. This isn't a line I drew this morning, but actually a line I had here from beforehand. So very nice technical behavior. 128.30 followed by 127.50 to the downside, 129.10 and 130 to the upside. High resistance at 131.40. If oil prices fall, we could see dollar CAD bounce back up, but currently the US dollar is selling off. Australian dollar finally managed to rise. A very hesitant rally, very hated rally, as some people talk about Wall Street, for example, the most hated rally, but figures have been positive, including the GDP, and more importantly, the US dollar has been weak. 76.60, some kind of support. We can see it isn't that strong. 76.40 is another line, and 76. Really key support is at the round number of 75. To the upside, if we have an extension of the current move, then we have 77.73 to the upside, and 77.40, maybe 77.80, and 78.40 is the high level of this year as the high level to the upside. Kiwi dollar, here we are finally. We had a series of false breaks above 73.30, 73.40, this range, and now we made a clear break to the upside, trading at the 74 handle, above 74, above the round number. The next level, of course, to the upside is the round number of 75. Let's see if we hold up to these gains, because breaking to this ground has been quite a struggle. 73.30 remains the line that I'm looking at. And to the downside, it's a bit more choppy. Let me update this line. I would say that 72 is a nice line of support, followed closely by 71.60 and 70.50, which used to be a double top. Okay, I'll look to see if we have any questions before I move to the other currency pairs. So good morning, Luca, once again. Logically, Carney should acknowledge the good UK data today and move to wait and see mode. Do you expect any fireworks from him trying to hold the pound down? Well, Carney, no, I'll answer this question later on. Let's complete the technical move. So we covered the euro, pound, dollar, yen, CAD. Now let's talk about the Swiss franc against the US dollar and then move to crosses. 97 is the current level of dollar Swiss. 96.40 remains a clear separator of ranges. You can even, well, you can see it worked on both directions. 95.50 is further support to the downside. Resistance there at 98, maybe a bit above 98, and higher resistance at 99. Always remember, the Swiss National Bank likes intervening in markets. Euro Swiss, that's where they do intervene. Currently slipping to the bottom of the 109 handle. We had it trading for a long, long time. Look at the narrow ranges. We reached 110, and we're back down to 109. 108 is support to the downside. I have many lines drawn here, but this pair, this cross, is very, very choppy. I would say the very bottom line in the sand is 107.60. And of course, the Swiss National Bank would like to see higher levels for this pair, weaker levels for their franc. Anyway, ranges are limited. Euro pound, lots of excitement here. So the pound rally is reflected also against the euro. The euro did some catching up against the US dollar, but as you can see, the pound is currently king. And we'll answer the question about Carney soon. 83.90 is the current level. Some resistance there at 84.40. Not such strong lines, I would say. This pair has also become a bit more choppy. 86, that's already much stronger line. Work both the support and resistance, and it's now way, way to the upside. 83.30 is support to the downside, followed by 82.20. Okay. Euro yen made a nice move to the upside. Remember, the yen was much weaker a few days ago, so the move we're seeing here reflects the re-strengthening of the Japanese yen more than anything else. Anyway, we made it all the way above 116. 114.50 is still some kind of resistance. I would say that 113.80 is some kind of support. This pair is closely watched by institutional traders because these are very highly traded currencies, but less by retail traders. Anyway, let's add a few lines here. I don't follow it that closely. 115.80 to the top side before 116.40, and current ranges are, yeah, and if we break under 113.80, I would say 112.20 is very, very low support to the downside. And just before that, we have the level here at 112.80. Okay. and this is a currency less watched by institutional traders, but more by retail traders. Pound yen, lots of pips to be made and to be lost. So we fell to much lower ground, closer to the levels seen post-Brexit. And now things have rapidly changed. Okay, so you can see here, this is a daily chart. We got close to, now we have actually double bottom there at 128.50, but a big bounce from there, already some 800 pips. 140 to the upside remains a round and important line. 143.40 is high resistance, and ranges here are a bit wild, I would say. Okay, and let's look at the last instrument for now and then answer a question, maybe more questions. Oil prices, we talked about the madness in oil prices. Here we are, we had in early August, WTI crude oil traded under $40. Remember that? Around $39, went all the way up to 49, and then began falling down, sort of ebb and flow. In recent days, we've seen this big jump from around here, 43, all the way to 46.50 on those rumors, and back to the previous range. I would say that $45 in the middle of the range between 40 and 50 is sort of a magnet for the pair, and we might get stuck around these levels until we get some more clarity. I don't expect any deal between Russia and Saudi Arabia and Iran and all the other countries. Anyway, important lines to watch. 47. Should update this as well. 46.50, 48.30, and to the downside 43. Okay, if you are trading WTI crude oil, of course, if you're trading the Canadian dollar, this is an important chart to watch. Okay, now let's look at the questions. Oh, okay. So let's repeat Luca's question from before. Logically, Carney should acknowledge the good UK data today and move to wait-and-see mode. Do you expect any fireworks from him trying to hold the pound down? Well, I expect Carney to, first of all, pat himself on the back. I'm not kidding. That's what central bankers do. So what happened is that we had Mark Carney at Bank of England react to very poor survey data, very doom and gloom figures, and they decided to introduce a comprehensive stimulus package. This package consisted of cutting interest rates, adding QE, adding corporate QE, making other adjustments, and hinting about rate cut in November. Since then, hard data, retail sales, jobless claims for July post-Brexit, all of these figures have been really good. And also the soft data, also the survey data has significantly improved. So you'll be asked, okay, but you said, didn't you react too soon? And he will probably say, no, it's thanks to our actions that the economy is actually doing better. At least there's more optimism. I don't think he wants a stronger or weaker pound at the moment. It doesn't matter that much for the UK. In theory, most countries want a weaker currency to boost exports and to lift inflation. But the Bank of England still expects to squeeze, doesn't want really strong inflation. And yes, it does help exports, but some of these exporters actually import goods before they export stuff. So the picture is a bit more mixed. He wouldn't like a weak currency, wouldn't like it to rise too much. So I think he'll dodge any currency-related questions at the moment. Hope this answers the question. I think I'll try to waste time at least until the next rate decision in November, which also includes the Bank of England's quarterly inflation report. So in the yes, it's testifying today. There's a rate decision next week, and then he might sort of give some general details, but the big fireworks, I think, we'll wait for November. Okay, so